Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about NEOGEN Chemicals, an interesting chemical stock. Whether it is a multi-bagger or is it run up too much, let's understand the company and let's understand what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I start with analysis of Neogen Chemicals, here is a small request. Kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on Patreon. Once you take the $10 Patreon membership, it will help you get access to the portfolio that I am having, a watch list, a number of stocks that I update, and also ask me questions on a daily basis on markets and companies. If you want detailed analysis on a set of companies, you can directly email me and we can work things out. Now about Neogen Chemicals, it was established in 1993 and they produce bromine-based chemical compounds. So different products include organic bromide compounds, specialty chloro compounds, advanced intermediaries, Grignard reagents, lithium salts, etc. So there are many different chemical compounds that currently has been produced by Neogen Chemicals. The usage of these compounds are in industries such as tires, defense, electronics, pipes. So multiple usage in many you can say industries in different sectors. The market cap of the company is around 1200 crores. Stock has run up over the years, so probably 50-60% has been the run up in the stock and has been doing well. The thing is, the kind of compounds that they are producing has been produced by other companies as well. So there's not a lot of you can say exclusivity, but some of their compounds are exclusive in nature. If you look at the financials of the company, then sales have gone up by a smidgen, just 82 crores versus 80 crores, but profit has come down. So profit has come down by nearly 20% to around 7.3 crores. What is more alarming is that the debt has increased, and I've always said that when debt increases in a company, then one has to be very circumspect of investing into the company. The debt has increased over 1 year, although there is decent promoter and institutional holding. So the holding amounts to around 91%, and only 9% free float is there with retail investors, which is a very positive sign. Return on equity is very robust at 29%. Operating profit margin is very good at around 18%. So 29% ROE is above average for the industry, and that also augurs well for the company. So if you look at the stock performance, stock has doubled in 1 year. So from around 240 levels, 220, 230 levels, it has gone up to now 480, 485 levels, but trading around 470, 475. China emission ban has really helped the company skyrocket because now most of that business is coming down to India, and that has been happening for the last 3-4 years at least. Have been hitting new highs consistently. Around 500, 530 odd is the new high, and it is around its new high. So only about 10% lower than that is currently it is trading at. Do not fall a lot. You need to consider that. Normally buying comes in whenever it falls around 450 odd levels. Currently it is trading at 39-40 times current earnings, which I feel is expensive. Most of the marquee chemical stocks are trading at max 30-32 times. Some of them even trading at 20-22 times, and they are not moving up. They are still in this band of 20 to 22 times earnings. So best of the best, you can say, chemical stocks that I have talked about on a number of occasions are trading between 20 and 30 times earnings. Neogen Chemical is trading at 40 times earnings, so I feel that it is slightly expensive. Bromide intermediaries in demand currently. So as I explained, that many other companies which are making bromide intermediaries are also doing really well in this market, and these kind of products are in demand at the current level, and that is why the stock is soaring at the moment. So might be that once there you would say once once the demand go down, then the stock may just correct big time 20-30%. From February highs, it has fallen nearly 50% till the March lows, but has recovered very quickly from the March and lows level. So yes, it did fall, but then the recovery also took place pretty smartly from those low levels. Uh, it would have run up too much. That's what I feel. Currently trading at 39-40 times. I think the run up has been too strong. One result which is quite subdued. If one subdued result come out, then you could see the stock correct appreciably. So trading at such valuations is dangerous for somebody who wants to get into the stock immediately. For somebody holding it for a long period of time might just hold with a stop loss. But current valuations doesn't seem very cheap. So if you look at the technicals of the stock, 550 to 575 is a strong resistance. It has gone many times closer to 540, 545 levels and have returned. Once it crosses this resistance of 550, 580 band, then you could see another move starting, which could take the stock up to 800 levels. But for that, the results have to be very good. Only then the stock will perform. The support lies in this region, which is the current stock price of 475, 476. So between 465 to 480 is a huge support, and that's where the stock is currently moving about. The 200 DMA is around 400, so if a fall comes in, we could see even 390, 400 levels come into the stock price. I won't be surprised if the stock goes all the way down to 400. I have a feeling that most of the chemical stocks, apart from two or three, might see some kind of correction, not total capitulation, but some kind of correction going forward in this year by the end of the year. And Neogen will not be left out, and it could see a correction to the 200 DMA. May consolidate in a range at the moment and may not go past 570. Major up move is expected over that 575 level, not 275 but 575 levels, and the valuations I'm sorry, the valuation currently seems stretched. So what needs to be done? In my opinion, I would avoid the stock. If I were to buy, I would buy into the marquee chemical stocks that I have talked about on many occasions on decline. So Aarti Industries, Vanity Organics, uh, SRF, and Naveen Fluorine, and Pidilite, and the likes of it, rather than diving into some other companies that are currently trading at much higher valuations than these companies that I have talked about. If you have it, then you can hold with a stop loss of 400, as I explained. So it could be in a range between 400 and 500 at worst. Have a good 4 5 year time frame. Maybe if a couple of more better results come around, if it crosses 570, 580, then it is headed towards 900. um, I would be more inclined towards being in consumer centric stocks rather than in chemical stocks, and avoiding small cap is a better strategy right now in this environment, rather than diving into small caps a lot. So be ready for volatile moves when you are investing into such companies. That is my suggestion, and have a deep stop loss at 400. So this was a video on Neogen Chemicals. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.